Hope you all are doing good. Today we are going to discuss repo rate and how does it affect us. Before we proceed, you should know what exactly is repo rate and then we will discuss about its impact. So repurchase agreement or repo is one or the same thing. Repo rate is a short-term repurchase rate. It is also called the interest rate at which central bank lends short-term fund against government securities. And this fund is given to commercial banks. Let's say a bank is needing money, then it goes to RBI or it goes to another commercial bank for borrowing. So here are two parties involved. One is the borrower, who is the commercial bank, and another is the lender, who is buyer of the securities. So borrower keeps collateral security and takes the loan. So it has two legs of transaction. Repurchase agreement, this is a formal agreement between two parties. Who are two parties over here? One is commercial bank who is borrowing, another is the lender or buyer of the securities. And here it is also called sell buy transaction. Why it is called sell buy transaction? Because this borrower is selling the government security for a short term and then taking a loan. This is a collateral security in simple terms. So repo rate, what is repo rate? Is the rate of interest at which our central bank lends money to commercial bank once they are having any shortage of fund. Here in our country, it is RBI. For US, it is federal bank. So basically, the central bank is lending to the borrower or commercial bank. So repo rate is a monetary policy tool used by a central bank, for example, Reserve Bank of India, to influence the economy. And it's a key part of monetary policy. Now, repurchase agreement, we have discussed the two legs of the transaction. So this is sell buy transaction. First one is sell and then again buy. Who is selling? Commercial bank is selling what? Government securities as a collateral security. So the term is sell buy and again it will buy back. Second leg of the transaction will be taking the securities back and giving the loan amount as well as the interest, which is called repo rate, to RBI. So here you can see two transactions. First leg, government securities are kept with RBI as collateral and RBI has given loan to a commercial bank. And then second leg, bank has returned the loan and repo rate to RBI and takes its government security back. It is basically for short term. This is short term loan. Let's take one calculation to understand. There are two leg of the transaction. In first leg, if bank is receiving loan, and the second leg is where it is giving back the loan amount along with repo. So for example, bank A borrows money from RBI, 1 crore amount, repo rate is 6% and the term is 1 day. So interest amount will be 1643.84, which bank A will return to RBI and takes its GSEC back. Now, it's a second consecutive cut after a long pause. First time on 7th of February, the Reserve Bank of India cut the repo rate from 6.5 to 6.25. This is 25 basis point. And again on 7th of April 2025, 6.25 to 6% after a long pause. So how it is going to impact? Now let's discuss that how it is going to impact banks, consumers, business, and economy. There are different parties. There are different parameters on the basis of which this short table says on borrowing will become cheaper. It regulates inflation, liquidity is injected in the economy by repo rate cut, economic growth is stimulated, FD rates, saving bank rates will be decreased, investment and consumption will increase. This is the snapshot of the impact of repo rate cut. Now understand with respect to different parties. Now let's take one party, bank, how it is going to impact the bank. So for bank, borrowing from central bank will become cheaper because the rate of interest earlier was 6.25, 25 basis point deduction, that is 6%. So borrowing will be cheaper. Banks will be more likely to lower the lending rate. They will pass it on to investors. For example, the borrowers will be getting less interest. They need to pay less interest rate to bank because ultimately they are going to pass it on to their investors. Bank can also lower the deposit rates also. For example, fixed deposit, recurring deposit, these interest rate will be lower. Not immediately, but yes, it will be passed on to the depositors. Again, the second party is consumers, you and I. So on consumers, we'll get the cheaper loans. Cheaper loans, EMI on floating rate loans will go down. I remind this the EMI of existing loans where they are taking floating loan will get cheaper, not the fixed one. Then increased spending, it will lead to increased spending will increase because more purchases on credit will proceed. Good for home loan buyers, car buyers, and the startups who are needing capital. On business front, we can take that cheaper borrowing will be there, which encourages the capital investment. It will also boost the stock market sentiments. Now, on the economy as a whole, we can say there will be increased liquidity into the system, and it will help reviving the growth, which is because of slowdown. And but it can also weaken the currency. It will put pressure on rupee, and if there is overdue of something, that can lead to inflation as well. So deposit rate and FDs cannot see the immediate impact or immediate drop down, but yes, gradually you can see FD's rate and saving back interest rate will go down. So in February also there was a rate cut. Uh, Prior to that, some of the banks has not even transmitted those passed on to investor those interest rate. So here it can be a little delay as well. It will not be from the immediate effect. This is the impact, one example where you can see the rate cut impact on home loan EMI. Again, I'm reiterating that it is existing home loan EMI will be reduced, or rate of interest will be reduced where it is linked with repo rate, where the floating interest rate is uh, taken rather than fixed. So this example says that 50 lakh is borrowed for 15 years at 9%. So EMI will be somewhere around 50,713, and after the rate cut it will be 25 basis points. So here 8.75 rate of interest. Then your EMI will be reduced from 50,713 to 49,972. This is the small change in your EMI. So that was all about the repo rate and cut in brief. Thank you for watching.